station of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Ben in San Jose. Ben, what's going on, brother?
Hey, Tom, how you doing, man?
I'm doing great, man. Yourself?
I just wanted to thank you and your team and everything. I've been using your technique with the 10-minute charts, watching the VIX, and just making a fortune here on the futures.
Isn't it interesting? That's awesome, man.
It's wonderful. Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all have been having a fantastic day. We are going to have Tim Ord on in the second segment, quarter past. We're going to have him on quarter past, so I guess in the third segment there. Let's take a look right now what we got going on. The SPY trading up 0.32%. Man, quite a volatile day, honestly. I mean, you've had some serious movement after you made the high of the day at 567, around 110. You've just been kind of coming down. You're bouncing off kind of that local low right here. I think there's just so much uncertainty with everything going on with the tariffs, and we're going to see what happens. There is some conversation, I guess, that Canada might be kind of acquiescing a tad, but of course you're getting conversation as well that the Chinese are reaching out to the Europeans to see if they can, make some kind of deal to resist these tariffs. There are tariffs being threatened on the buyers of Russian oil. I guess the deal between Trump, Putin, and Zelensky is not going as smoothly, I think, as people had anticipated. And then, again, you get conversation around some kind of union or at least cooperation between the East Asian countries, right? Which is going to be Japan, South Korea, China, which is very unique given their kind of history. But I mean, you're seeing now, even in the SPY, you are coming down a little bit here. You're up about 0.26% right now, trading at 562.44. Your composite is trading up 0.38%. The Dow Jones Industrial is trading up 0.19% at 42,070. Those Russell futures are somewhat strong here, up 1.07%. Taking a look at the 10-year, I mean, your yields have really been kind of coming down, right? And this is what people have been kind of wanting within the Trump government. I mean, you're trading right now at nearly 4.2. You had a low yesterday of about 4.15, which is pretty impressive. 4.11. And, I think a lot of what this is some of these bigger guys kind of pricing in the potential for a recession, right? Of course, you're getting some kind of conflicting news coming out of New York and Atlanta Fed. Atlanta Fed is saying they're seeing a contraction in GDP of 3.7%. New York Fed staff is seeing, what is this at right now? 2.86. It's just there's too much uncertainty right now to be 100% certain, right? But I think you're seeing a lot of stressors going on. People are becoming very late on their car payments, on credit card payments. You have the Dollar Tree CEO that people are just completely stretched to their limits right now and just buying the absolute basics. And you'd anticipate a company in their position going for that niche to do quite well in this circumstance, and you're not necessarily seeing that. Of course, you have Target is seeing significantly lower foot traffic. Now, there could be a lot of reasons for that, right? I think some people are upset with them politically, but I'm not sure that's really the main driver. Of course, you get a lot of people buying online nowadays as well. Let me see here. What is that? TGT? Trading up 0.96%. But yeah, you've just been pretty low for quite a while there. It doesn't seem like it's getting better for them either, especially with contracting foot traffic. But I mean, it seems like, yeah, these, and I remember a few months ago, you had Elon Musk saying buy the 10-year. Of course, Bessent's been talking about it, trying to figure out ways to make that more attractive. I still get concerned with the idea that price inflation continues, even if you get, GDP contraction. What do you do in that circumstance, right? So I think the answer is nobody really knows. And this is definitely going to be one for the history books with everything considered, especially with the tariffs. I think this is going to be very fascinating. He's going to be speaking about 4 p.m., so we'll see what happens there and how the market responds. I think it's a little, kind of froggy to be moving up today. You're on very low volume on this movement to the upside today, and we still have an hour left, a little bit under an hour left. So, yeah, very tough stuff. Take a look. You have Lucid trading off 5.14%. I don't know, again, what changed with that thesis. I mean, it is trying to close a gap, right? So you might get some kind of sell-off there. And then we look at Tesla, up 4.43% on worse than anticipated sales. I think they were anticipating, a lot of analysts, around 377. Then you got 337, that's deliveries. And then productions were also markedly lower as well. It's about a 13% decline with deliveries from a year ago. See, in the first quarter of 2024, they reported 386,000 deliveries in production of, and this is the crazy one, is the production, right? Of 433,371. Now, you have something that kind of muddies this entire thing, which is that they were switching over their factories that they could build these new Model Ys, right? So it remains to be seen. I think the real story of what's going to happen with Tesla is going to become a little bit more apparent in the coming weeks, right? Do more sales for these newer Model Ys come out? Does production ramp up? We're going to see what happens. At this point, if you're not in a certain position, at least for me, right? I mean, I think the price target of 180 kind of makes sense, even considering and baking in the kind of growth that they might have, because DCF doesn't really give you a super solid price point that's anywhere near this level. Again, this is a ton of volume to the upside today. On this kind of news, I think people are relying on the growth in the energy sector for Tesla. I don't know. Again, this is starting to get just completely divorced from fundamentals. And until you get another total scare of liquidity, I could see Tesla continue to go up. I think there's a psychological level, right, for that 300. But, this thing needs to kind of get to that point. If it doesn't get that energy to close up at that 295 area, that's a little bit tough. You're getting kind of lower lows around this level. You're not getting as much, movement to that upside. And again, we're up 4.62%, but this is like consolidation patterns here, right? And the volume to the upside is pretty strong, but it can't seem to break free yet. So we'll see what happens with that. I still think it's a little bit beleaguered. It seems like Musk's time at Doge is going to come to an end. I think that was something that was settled. There's something with him not necessarily being in the government. He can only work for a certain amount of time. And so he's coming off that, which I'm assuming is probably what's really giving this equity a boost right now. But I'm not sure that changes anything. Folks, if you stay right there, we'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. Again, of course, thanks for staying tuned. Looking at the SPY right now, trading up 0.19% at 562.198. You got that composite trading up 0.26% at 17,495. The Dow Jones Industrial trading up 0.14% at 42,049. Of those Russell futures up 1%, trading at 2,046.50. Getting ready for those tariffs. Now, of course, today is Wednesday, so it's a little out of the ordinary, but we wanted to get you your normal dose of the Ord Oracle. So we're going to have Tim Ord on today, and it looks like he is on during the segment. You go over to ord-oracle.com. You can check out all that Tim has to offer, his newsletter, his book. Additionally, you go to TFNN.com and go to the services tab, and there are two fantastic webinars from Tim Ord on there. You definitely want to check those out. Tim, how you doing?
Good. So kind of like a lot of nothing here for the last 3 days.
Definitely.
But things are developing here. I've been kind of, I got bullied a little bit too quick, and I didn't really sell out that position. But right now, over the last, actually since March 13th, we actually been basing here, and this whole thing's forming some sort of a bottom. How big a bottom, I don't know yet. But it depends on the next rally. So let's kind of look at the bigger picture. The first chart here is the American Association of Individual Investors Bull-Bear Ratio, and it's a 3-week average. So this kind of looks at the bigger picture. So it's a weekly chart, and plus it's an average of 3 weeks. So to get this low, I got a little circle down there. It's the middle of the chart. And we very seldom get down there. The last time we got down there was 2022, and that was when it was forming a major bottom. But most of the times it gets down below 0.75. You usually get close to a low. This time around, I think we got down to 0.34. Now we moved up a little bit. Market's still kind of going sideways here. But this indicator suggests we're at some sort of a multi-week low. Could have turned into a multi-month low. That's a possibility, but it's at least a multi-week low.
Okay.
So anyhow, that's still bottoming. We really haven't moved much from March 13th. We went up a little bit, came back down. To me, this is a basing. I'll show you some other indicators to kind of prove that point. Let's see. This, I think I got the wrong. Let me check here.
Set up on your little check as well.
April 2nd. All right. So, okay. Well, anyhow, this is one chart. This is another chart. I had another chart in here. But anyhow, let's get back to the second chart. This is another weekly chart, and it's just a weekly SPY. That's all it is with a Bollinger Band on it.
Yep.
This indicator, if you ever take it back, I took it all the way back far as you can go, and the probabilities of this working is really high. Works better at bottoms than at tops, but it does when you do give it. The indicator is when you close below the lower Bollinger Band. You're usually, it's a close, not an intraday low, but a close below the lower Bollinger Band. You're usually at least a multi-week low. If a lot of times it could be a multi-month low. But I went back to 2022. I could have gone back a lot further, but you wouldn't be able to see what goes on. So, but back in going into the 2022 low, it hit below the lower Bollinger Band a couple of times, and each time you got at least a multi-week rally. Matter of fact, this one here, you got a multi-month rally. The one back in October, approximately of 2023, it rallied up several months, and we're back down below it. If you look over here to the right window, you close below the lower Bollinger Band. Went to 3 times last 3 weeks. This week we haven't, but that's pretty unusual to do that. Normally, one time you get it. But 3 times in a row. So does that mean something special? I went back to 2016, and that's basically the last time it did that, and went back up to the previous highs. So the probabilities of that doing it, that could happen, I guess, because the more the market's oversold, the more powerful the rally afterwards. So we'll see if that turns out to be true or not. But I'm thinking we just get back to the mid Bollinger Band area, which is previous times when this happened. That'd be the minimum, which is around 590 to 595. So that's what I'm thinking there. This week's low tested the March 13th low. You can kind of see it here. This is a weekly chart, so ideally you like to see this week's volume less than the March 13th volume. Sure. And it kind of looks, that's probably what's going to happen here. So, have we seen the bottom? Probably. But, market, it's got, 2 more days of trading before really to say that. But I think we're probably, this week is probably the low. Then from there we start rallying. So anyhow, this is another kind of a weekly chart, which is more of an intermediate term chart, just like chart 1. Right. There's another weekly chart, because I flipped the weekly charts because the daily charts failed at my last signal, so I flipped to the weekly charts, the bigger time frames, and the weekly charts rule the daily charts rule the hourly charts. So I wanted to take a bigger view of what's going on. So anyhow, the middle window is a weekly SPX tilt ratio. So this is a ratio between the equity market and the bond market. Yep. And that's pretty much the whole world market. It's a huge market. So you want to see what the relationship of those two things do to each other. So if one gets out of whack compared to the other, then usually you're about due for a reversal. So I use the RSI for that. And I took all the buy or the sell signals out and just concentrated on the bullish signals, I guess you might say, which is all these red lines. So between 2021 and 2023, we didn't have any signals at all as far as the buy signal goes. So now we're starting to get 2 of them. We got one back and looked like probably July of 2024. That was a decent bottom, came back, looked like for a retest right here, then went up. Now we're back down there again. We're at 29.72. So this is giving a signal right now. We actually had that signal bullish last week also. So we're making a low, a high probability low. Nothing's perfect, but probably we're at a low 90% of the time. And these are the other times we got signals. We're back in 2019, picked out that low, picked out some minor lows, picked out the major low of COVID crash, and picked out the low of last year. Now we're back at it again. So it's worth, I guess, being long right here, right now. If you want to wait 2 more days to really confirm it, that's fine. Sure. But here's another chart, more to the same. So I flipped to the weekly VIX. VIX is kind of, If you notice, I'm kind of using extreme indicators when they push beyond their boundaries. I use that the Bollinger Bands for that. But if the Bollinger Bands get up above the upper Bollinger Band on a weekly time frame or below, the market's stretched and due for a snapback. And that's where I circled here. The Bollinger Band on the March 13th low got above the Bollinger Band at the same time when the S&Ps got below the Bollinger Band. So it's kind of a double signal. You knew you're going into a low in here. So I'll hold.
Yeah, Tim, please stay right there. Folks, we'll be right back with Tim Ward right after the break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. You're watching the Tom O'Brien Show. We're joined right now by Tim Ord of the Ord Oracle. You can go check out his website at ord-oracle.com with the newsletter and his book there as well. Check it out. Tim, we have two questions, if you're able to take them. One on volume and one on the trend.
All right.
So the first one, they're asking for your take on the daily volume bars when you compare to a recent retest of the lows. They're saying volume on the retest for the SPY and the Qs was at least 10% higher, which suggests that the lows could be revisited again. That's the daily 313 and 331. If you have any insight on that.
I do, because I noticed the same thing, and I actually put it in my market letter. And so that implies that the previous low of, 3 days ago could be tested again. Now, which is a possibility. If it's going to do it, it's going to have to do it between now and Friday. Now, the reason why I say that, I think tomorrow's going to be a kind of a sideways day, and probably Friday's going to be a sideways day, or not. If it's going to be up, it's going to be up not a lot. If it's going to be down, it's probably not going to be down a lot. So I don't think we're actually going to test Monday's low, which is that Monday's low tested the March 13th low and did so on higher volume. And so I seen that and I said, well, that opens a test of the Monday's low again. And that may be true. But again, the weeklies outrule the dailies. For instance, if the volume actually kind of is drying up this week compared to what was happening on March 13th week. So if you go to the weekly charts, the week's not over yet. We got, Thursday and Friday to go yet. But if the weekly charts are lighter volume on the test, in other words, this week is lighter than the week of March 13th, on a weekly time frame, that would be bullish. Even though the daily is higher, the weekly is a lot less. So what I'm saying is, then, if the weeklies test the previous low and lighter volume, then that is the low, and the dailies don't have to go back and down and test that low because the weeklies roll the dailies. Probably, did I say that makes sense at all?
Yeah, no, I think it made sense, and I think it probably should for the individual asking. If not, of course, tell me. Yeah.
So what I'm saying is, I'm looking at the weekly volume compared to the week of the March 13th volume.
Yes, on the week.
If this week's lighter than the March 13th volume, at least 10% lighter, then that probably retest is done. Even though the daily is higher, the weeklies rule the dailies.
Absolutely, yeah.
All right. So what's the trend thing?
Yes, the trend. He was saying he was expecting a high trend reading for today to help set a bottom. Opening trend was 2.32, but per he says Obi-Wan's teachings, he's like, I usually exclude the opening value. He goes, he wants to know how you're treating essentially the opening value for trend. If he included all that, criteria would have met, and he should have been long, is what he kind of adds at the end.
Well, there's not all indicators work all the time. That's the reason I kind of flipped out of the trend stuff, but it still is valid here. If you look at the trend last Friday, it closed at 1.62, and the market gapped down Monday, this week, and started to rally. So I think we got enough panic to get this market going to the upside. And the 2 and 3 day trend back as of last Friday did pop into bullish territory. To me, I like to see the trend really just blow out.
Sure.
And we're not getting that here. And that's one of the reasons why I think we're not going to get a bull market this year, because we don't have enough fear, which is basically trend readings higher than 1.2, to really have this market keep on making higher highs. I think at best we can see this year is probably a test of the previous highs back in February, up in that high there. So the trend is not real bullish here. I see that. But we did have a bullish trend set up last Friday. And so far, in my opinion, it's working because the market's higher than Friday's close. Not a lot of energy. But if you look over today's trading's not over as far as volume goes. But if you look at today's volume is probably going to be a little bit higher than yesterday's volume. And you like to break higher previous highs, which is yesterday's highs, on at least equal volume. So I think today's volume is going to be at least equal to yesterday. So that keeps the short-term trend up. So now you go to the previous high of a couple of days, or be last Friday's high. You like to have today's volume higher than last Friday's high, because we tested last Friday's high, and I don't know if we'll reach that today or not. That's the reason why I don't think we're going to just keep going up right here. We don't have enough volume. But if you compare to the last 3 days volume compared to the previous 3 days down, and if you do the average, we got higher the last 3 day average 3 day volume, which are all up 3 days in a row, compared to the last 3 days down of last week, have higher volume than those 3 days down. So you can see energy starting to flip up here. Did that make any sense?
Yeah, understood entirely. But then with the opening trend, I'm assuming that's the trend at the beginning. I don't always look at the trend, but the trend at the beginning of the day. Do you have any bearing on that, or are you kind of looking how
actually you do? To me, I always take the close of the trend.
I see. Okay.
It accumulates all the, a lot of times when the market opens, you got different sectors open at different times, and
understood.
And it really, you got maybe a lot of buying in one stock that's driving the trend up or down, or something like that. But basically, in my opinion, you like to see actually trend high all day long, especially during a rally. That's really good. But the trend on the close accumulates all the day's activities and puts it in one number, and that one number is usually pretty accurate. And today we got 0.88 right now, which is not great, but so it's not a real powerful reading. But the trend close, I'll put it this way, the trend closes work a lot better than the trend opens.
Understood.
That's relative, but trend open, to me, I really don't concern it too much. I look at it, but I don't think you got really high reliability information from it. I'll put it that way.
Certainly.
But on the trend close, you do. So because that accumulates all the what happened throughout the day. So
fantastic. All right, that seems like the questions for you. So if we want to keep going.
All right. Okay. So we're looking at an intermediate term low, and we think we're going to get a bicycle on the volume statistics on the weekly time frame. As this week's volume is lighter than the March 13th volume, which I bet we'll have to take a look Friday, but I think that's probably going to be the case. So let's say this is the bottom, and so what needs to happen now? Right now, if we are looking at bottom, and the rally is going to start here, probably not this week, but probably at least next week, as very late as week after. But the next rally is going to tell a whole lot, because once you get a bottom going, you need a sign of strength off that low. If you don't get a sign of strength, you're going to come back down again. So this one,
I know. Well, Tim, stay into the next segment. Totally fine if you're good with it.
All right.
Folks, we'll be right back with Tim Ord after the break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
All right, welcome back, everybody. We're joined right now by Tim Ord of the Ord Oracle. Tim, before we went to the break, of course, we had a nice kind of question segment there. What are we looking at now?
Okay, so say we're making a bottom, and off of a bottom, a worthwhile bottom, you have to have a sign of strength.
Yep.
And you can do it several different ways. You can do it advanced decline. You can do it a volume surge, which will work just as fine. Ideally, you like to see them both go, because volume, that'd really be bullish. But this one I got right now, volume you can actually gauge pretty easily. You just compare to the volume going up compared to the volume going down. If you got higher volume going up than compared to volume going down in the last leg or so, it's easy to see. But this is kind of a one I developed. There's wag breast thrust indicator that started to get triggered and kind of fell to pieces. So that's not going to, probably will not get triggered. So I didn't present it here. But I got another little shorter term one. It's the 5-day average of the advanced decline. And it needs to get below 0.7, hit 0.68 on March 31st, so a couple of days ago, and now we're turning up. So to get a sign of strength, it needs to go from 0.7 to 3 in 21 days, or basically 3 weeks, 15 days of trading. So will that do it? I don't know, but this current rally needs to keep going for this indicator to get from 0.7 up to 0.3, which is, I forgot what date that was. 3 weeks from March 31st, so around April 21st area. It needs to get that. And if it does, then we had one back in December, January. I got it all the shaded areas, previous ones we had over the last couple, 3 years here. So we had one in January, so I was kind of bullish. And you get another one pretty close to the same level, that would add to the bullish situation. And will we get it? I don't know. We'll see how the rally performs going into April 21st. But if we do get it, then at worst, we're going to move sideways. And at best, we're going to move up. So that would take, my opinion, would take the scenario to the downside out of the equation. So then we're looking at the lows in this vicinity here. So then it could be developed trade, go back to the previous high, back down. So this indicator needs to click in, I guess, between now and April 21st. So that'd be the sign of strength off the bottom. And if you get two in relatively close proximity of each other, which is the last one was around January, they got triggered, then that would bode well for at least a sideways market, if not a bull market. So we'll have to wait and see. So, but that would take out, my opinion, would take out the downtrend. So that's the equity market. We're looking at a low. We're working on a rally to the upside, and come mid-April, we'll know how strong that rally will be. If it's a bull market, if it's a bear market. If it's a bull market, this indicator gets 3 or higher. And if it's a bear market, we won't come very high at all, probably 2 or 2.5 or something. So we'll see. Anyhow, that's the equity market. So I'm a bull for the next several weeks.
Fantastic.
So that's the equity market. Gold market.
Yeah.
We got about 5 minutes here.
Yeah, totally.
Really
yeah.
not a lot. Yeah, not a lot to say. It's doing what it's supposed to do.
Yeah.
So this is a monthly chart. Monthly charts rule the weekly charts, rule the daily charts, and all the way down. So the most important chart right now is the monthly chart. As long as this chart remains bullish, you can have some consolidations along the way, but as long as this chart remains bullish, you're in an uptrend. So we're breaking above that trend line right now, around that 42, 43 area. In my opinion, that area becomes support, so that's basically your downside around 43. So in general, your downside is minimal, and your upside is quite a bit. Matter of fact, if you do a head and shoulders pattern on this thing, which I think is what it is, has an upside target of 65, which is actually above the old highs.
Totally.
Yeah, so we'll see if that happens or not, but I'll have some indicators we get close to a high, but I'm not getting any right now. This is a momentum indicator. We've seen this chart before. It just measures the up-down volume percent in GDX, so it's connected to GDX, not just the general equity gold market. And as long as this indicator stays above zero, the uptrend's intact. Last time we had a signal on this was in probably around April, and it stayed bullish all the way until October. Then you got a big down, and looks like a bottom in January of 2025, or 25. Now we've gone up again, so we're back into the bullish range. This is a 50-day average of the up-down volume, so it's kind of a longer-term indicator, but it's healthy. It's shows no sign of really letting up here, especially when it gets this high. Very seldom you go straight up, straight down. You did there back in 2022, which is kind of rare, but now we're starting to get up here, and we're staying up here. 2024, you stayed up there most, over half the year, 7 months of stocks moving higher.
Right.
And we're back up there again. We'll stay up there. I think we'll probably stay up in this region until July. May change, but there's no reason to be short this market other than minor consolidations. Yeah, there's that head and shoulders pattern I talked about. If you do the measurement from that head to that neckline, you get a 65. So will it be reached? Don't know. Really don't care, because some of these momentum indicators were turned down before that happens. So, but they're not. So right now, this market's strong. There's no reason to be out of the gold market. And here's the indicator I want to present. This looks at the big picture, and what it is the bullish percent index for the gold miners index. And the bullish percent index measures the stocks that are on point and figure buy signals for for the gold miners index. So it's a point and figure. In other words, right now we got 89.29% of the stocks in the gold miners index that are on point and figure buy signals. So that's a strong showing. But the one I point out here, when it gets up around 95, which is here, and here, and if you look at what happened from there and here, they're all at highs. So you don't want this bullish percent index to have more than really around 90% stocks on buy signals. If you get over 95% buy signals, you're probably looking at some sort of too much euphoria going on.
Totally.
And that's what that implies. So, if you get up 100%, matter of fact, I talked about Tom about this a year ago. So you get above 95% of stocks on buy signals, that's usually a death wish. So I'm hoping we don't get above where we are right now. So you got 90% of the stocks on buy signals, which is really a strong market, but you don't want any stronger than this. So I'm hoping we stay in this vicinity, and I think we will, because this indicator right here is showing good momentum. So we're not having any short-term weakness.
Sure.
And but if this gets up to 95%, I'll pull back my bullish horns, because you could, because some of these consolidations are pretty severe.
Absolutely.
So,
Tim, thank you for staying on so long. Is that the last chart there?
All right.
Yep.
See you
Thank
tomorrow.
you. We'll see you tomorrow, Tim. Thank you so much.
All right.
Folks, check him out at ord-oracle.com. Get the SPY up 0.72%, composite up 0.91%, Dow Jones Industrial trading up 0.62%. We'll be right back for a short segment right after this break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. Jacob Shoup, you watch the Tom O'Brien Show. We were just joined by Tim Ord of the Ord Oracle. You know, if you ever want to go back over what Tim and I were discussing, you know, you want to pause his charts, keep going, you can go to our YouTube. Okay, and at the end of programming today, our producer is very hard at work getting those clips up for everyone. You can go check us out at Tiger Financial News Network. If you decide to do so and check out that video or any of our videos, please consider liking and subscribing. It helps us all out immensely. Take a look at what we got going on right now. Some nice movement to the upside, at least at the end of the day here for all the indices, really. You have the SPY trading up 0.76% at 565, the composite up 0.98% at 17,620, the Dow Jones Industrial trading up 0.68% at 42,279. You know, Tommy kind of spoke about this a little bit in today's issue of Market Insights, so strongly recommend checking out that newsletter as well. I mean, you're taking a look, you know, you pull this out just on a longer term, there is not a lot of volume here. In fact, there's some of the lowest volume, you know, you've seen in a few months here in the SPY. So I think that's something to consider here. Is this kind of a fake out? I think there's a lot of uncertainty still with the tariffs. There's cycles of these kind of things. Issues are brought. So long story short, is there a lot of conviction behind this move to the upside? Not so sure, right? I mean, this is some low volume. Now you take a look, let's go, just individual equities in and of themselves, because I've been watching Tesla the entire time, and I'm going to start dreaming about this forsaken company because of how much I think about it. But this is some substantial volume to the upside, right? Still not getting high to, really test that most recent high. Some issue. A lot of times equities can kind of wear themselves out pushing this high. There's a lot of volume to the upside. Of course, it's a big candle as well. A lot of selling in the morning. Him coming back is nice. When you kind of think about it in a vibe sense. Folks, thank you so much for joining me. We'll see you tomorrow morning, 9 a.m. with Tommy O'Brien for the morning market kickoff. Take care.
Building